What's going on, guys? It is Stephen Delisle, and today we're going to talk about interest rates and navigating them when it comes to the rate hikes that we're experiencing right now. All right, so we've got an example for you, but before we get into that, just know that I am not a licensed lender. We just talk to a lot of lenders, whether local or not local lenders, and we're getting an average of an understanding of how to buy down a rate and not just be stuck with the current rates that are being given out by the Fed right now. So the example that we have is if you own a house currently, and let's just say it's $300,000. That's what it's worth, and that's what we're going to sell it for. But if you have a $300,000 house that you currently own and you want to buy a $400,000 house, and remember that on average, Americans have 60% equity in your house. So for round numbers, let's say you've got $200,000 equity in your home, but you're saying, Stephen, look, I already have a really good rate and I don't want to pay 7% or 6% in my new house and pay for a more expensive home on top of that. So what we're going to talk about is buying down the rate. Let's say you have a $300,000 house you own currently and you want to buy a $400,000 house. Now let's talk about buying down that rate so you're not stuck with those rate hikes that we've been experiencing this year. All right, guys, so we're going to operate off of what the rates are currently, and they're floating around on average 6.25. So in this scenario, you're selling your $300,000 house, you're wanting to buy a $400,000 house, and you are putting 20% down, which is $80,000. Realize that it's going to cost you 1% of your mortgage value to purchase a 0.25% buy down on that rate. And it's not based off that $400,000 ticket price, it's based off the $320,000 ticket price that you're going to be getting a loan on. So that cost is only $3,200 per quarter point buy down. Different lenders have different costs. Always remember that. I've talked to some lenders and they say, hey, we can only buy down 1 point. Some say 2.5. So we're going to take the average of those and we're going to just say 2 points buy down. If we're at 6.25 right now and we buy down all the way down to 4.25, that cost total for that buy down is going to be $26,000. The biggest thing I want you guys to walk away with is after you pay 20% down on your next house, after you pay commissions, after you buy down the rate, and the $6,000 on average closing cost it's going to cost for you to sell your home, you're still walking away with $70,000. And guys, remember that people on average stay in their house between 5 and 7 years. So if you intend to stay in that new $400,000 house for that same amount of time, you're going to more than pay for that buy down of rate. This was just an example. So if you guys want to know specifics about your situation and your goals, we're happy to sit down and help you understand what that looks like and help you navigate in your current situation. And remember, with Delisle Properties, luxury always comes standard.